Good evening, guys. Time is around 9:26. Let's look at today's Bank Nifty as well as Nifty 50 trade analysis. First, let's look into Bank Nifty. You can see this black color line is weekly pivot levels. You can see on Monday the market took support here, and on last Tuesday also the market formed some kind of support over here, and here it clearly broke towards the downside. And the next time market gapped up and again rallied and broke towards the downside, and again you can see the price continued further towards the downside. But you can see the same VWAP level here. The market targeted all those sellers who might have entered here, 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 or here. After targeting, the market targeted all those buyers. After seeing this gap up, a lot of buyers might have entered the market, expecting the market to go further high. Or you can expect a slight retracement towards the 9S plus 21 moving average, and you could have expected bullish momentum like this. But you can see that the overall market sentiment is bearish only. So the market is trying to move towards the downside. And you can see here that the market gapped up, targeted all those sellers here, and marking the mid of the first candle as well as the 5-minute zone. 1, 2, 3, 4, 5 candles zone. And this is the day VWAP level. And this is the weekly pivot levels. And this is the daily pivot level. And you can see market actually gapped up. And in case if the market sentiment would have been bullish, the market would have continued, consolidated above the 9 as well as 21 moving average, and continued further towards the buy side. But you can see here what actually happened is that the market traded below this 5-minute as well as the mid of the first candle zone and continued towards the downside, faced rejection. You can see this candle, guys, rejection of price from the pivot, from this weekly pivot levels as well as the, what do you call it as, the VWAP level, and continued further selling towards the downside and clearly broke structure here. This is the breakout structure towards the downside. But what will happen sometimes is that the market might take support from these pivot levels as well as this 200 moving average over here. You can see, guys, this candle over here, the 200 moving average support as well as the pivot levels. You can see this rejection of price and closing above this 200 moving average. In case if you would have found another bullish candle after this candle forming like this and breaking this high as well, you could have waited for retracement here, the fair value gaps over here, and continued further towards the buy side. So in case if the market would have broken here, the market would have retraced and continued further like this. This is how usually in case if the bullish sentiment would have been. But you can see after this dodgy candle over here, the market couldn't even cross this 9 as well as 21 moving average here and formed a bearish candle over here, clearly signifying the overall sentiment of the market to be bearish. And in case if you see if the market might take support from yesterday's close level, you can see again the market clearly broke towards the downside, clearly showing sentiment of market from bullish to bearish. And in case if you see this kind of support over here, in case of support like this, you can plot the anchor VWAP level, and once this anchor VWAP level is broken towards the downside, you could have traded towards the downside as well. So in case if you see this retracement, or in case if you see this retracement over here, this last up move towards the down move, which actually broke structure towards the downside, you can consider this to be a breakout structure. And if you consider this swing over here, the common point between this to the common point between this, you can see price facing rejection from 550 level over here, and price couldn't cross that level. This is a 550, and anchor VWAP levels are just for confluences, guys. So in case if you're entering in the right direction or what. So if you plot this level over here, this base over here, you can see after this candle you could have entered short position, keeping your stop loss just above that candle itself and targeting the fib extension levels, the common point between this to the common point between this to the common point between this. You could have targeted all the way to 3.6 level over here. Look at this, guys, all the way to 3.68 level. This was one beautiful trade where you could have easily taken short position here, keeping your stop loss just above that candle and targeting all the way to 3.68 level. And if you look at higher time frames, if you look at daily chart guys, I will show you one more thing. You can see here that the market here forms some kind of support. Here it forms some sort of support. And here also I expected that the market here will form some kind of support, forming a triple bottom. So you can see price came all the way till this level and rejected price. If the market would have strongly broken to this level, there would have high chance the market would have made new lows and continued further selling towards the downside. But you can see the market here form some kind of support. But in case tomorrow the market gaps below this low rise, there is a very good chance that the market will continue further selling towards the downside. So in case if the market tomorrow gaps below this zone, yesterday's low guys, there is a very good chance that the market will continue further towards the downside, or so triggering all those new sellers who might have entered, the market might move towards the upside and further continue towards the downside. But let's look at today's trade analysis. You can see guys, this was a very good risk to reward ratio. After this huge rally, I didn't ask you to take randomly here, but with a proper price action of how market behaves, I have clearly explained to you how you could have taken short position. And you can see after this kind of rejection candles guys, you can see this hammer candle over here, this hammer candle, another hammer candle over here. You can see 3 hammer candles clearly showing some kind of demand at this zone. And you can see the market clearly broke structure towards this, forming a chalk over here. And if you consider this retracement, if you mark the low to high, the common point between this to the common point between this, let's consider this way, because the low is the blue candle and the high is also a blue candle. You can see market taking support from 550 over here. This is the 550 level guys. And the last down move to the up move, if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you can see the market came all the way to the 100% move over here. And if you try to plot this swing over here, this high to this low here guys, you can see this is a 550 level. So you could have considered taking long position here at this 550 level and targeting all the way to 100% move over here. This was one long setup where you could have taken, keeping your stop loss just below and targeting all the way to 100. This was a small scalp where you could have taken long position. Or in case if you try to plot for better confluence anchor way up level here, you can see price rejecting here from this low. Here you can see the market tried to break this low but closed above this zone and followed by another doji, and the market is trading below this anchor way up level. After this kind of rejection also you could have entered long position, or you can see after this retracement, after reaching the 550 level over here, the market faced some sort of rejection here from this anchor way up level. And you can see with this rejection you could have kept your stop loss just below that candle itself and targeting the 100% move, or you could have tried your stop loss till that zone. But you can see if you consider this huge impulsive momentum towards the downside, this was a 550 level, and you can see the market clearly broke towards the downside, forming a chalk, clearly broke this low as well. You can see here. And if you consider this swing over here guys, the last down move before the up move, or you can consider this swing over here because this is the main swing. You can see this guys, or you can consider this swing as well. You can see the market facing some sort of rejection over here. This is a 0.23 level, which I have already mentioned to you in previous videos. Whenever the market retraces back to this resistance levels, or you can expect some kind of supply over here, the 550 level supply over here, when the market came here, showed some kind of rejection, you could have plotted the 0.23 level. In case if the market closes above that zone, you would have exited your long position. But here you can see from this zone, the market clearly came and broke towards the downside. So in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted all the way to 1.68 level. You can see the market came all the way to 1.68 level, or you can consider this common point guys. You can see this is the target where you could have exited your long position, 1.68 level. after this kind of rejection from 2.36 level, keeping your stop loss just above this zone. I think this is quite not a good price action trade, guys. But in case if you have been very well experienced in how the market usually behaves, or you could have even think this kind of support over here where the price might take some kind of support here and continue further towards the buy side. But here you can see the market rejected price from these levels. So after this break of this level towards the downside and the market kind of retrace here and face rejection from this 29 as well as 21 moving average, you could have taken short position expecting the market to go further towards the downside. Let's not consider this trade, guys, because this is quite complicated. I think for new traders who are watching my videos, I think it's way above the price action, and with a lot of experience only you can spot such kind of trades. You can see this kind of rejection candles, guys, clearly showing some kind of selling pressure over here. So that's why I have plotted the fib levels over here, the fib retracement, and I have marked the 0.323 level. This is the premium zone, guys, and this is the discount. Whenever there is a swing structure over here, there is a premium zones and as well as discount zones. You should always sell in premiums and buy at discount. So this is the selling, guys. So this is the premium zones where you should sell, because when you sell at premium zones, you have a very small risk to reward ratio. In case if the market breaks above this level, you could have lost only 5 to 6 points, guys. See, in case if you might have lost this high also, 30 points. It's barely like 5 to 10 points in premiums, guys. But in case if you win, there is a very good risk to reward ratio for this. So that's why I have mentioned you about this trade where you could have easily taken keeping your stop loss just below above that high and targeted all the way to this zone, guys. I hope you are understanding what I mean. This is this demand supply zone, and that's where I marked it. You can see this kind of engulfing pattern clearly piercing this kind of bullish momentum and clearly closing below this candle's low. Even after this kind of retracement, clearly changing the market sentiment from bullish to bearish. And that's why this zone is very important, guys. In case if the market sentiment would have been bullish, the market here formed a shock over here, retraced to FE50 levels and moved all the way to 100%, and market might take support from 9 as well as 21 moving average, or market would have come all the way here. And after taking support from these levels, guys, the market would have very bullishly moved towards the upside like this, showing a clear sign of bullishness. But here you can see the market after taking support from this pivot, the anchor gap levels over here, forming another bullish engulfing candle. The market exhausted price over here, facing some kind of dodgy candles. Again, the market broke towards the downside. Again, market retraced all the way here, formed a rejection candles and continued further selling towards the downside. You could have taken this trade with a very small risk to reward ratio. I think it's very easy to tell before the trade, guys, but with a lot of practice, you would be able to spot and scalp this kind of trades also. Or for better risk to reward, guys, in case if you might have wanted to enter this kind of swing, you could have just plotted this swing structure over here. In case after this break of this 550 levels over here, where the market clearly broke and again retraced, price rejected from these levels and continued further towards the downside, here is where you could have taken this short position and targeting all the way to 1.68 level, or you could have targeted the double of this swing, guys. So in case if you see here the swing of this, so if you might have considered the double of this, the common point between this to the common point between this, you could have targeted all the way to that zone, or you could have targeted 100% or the 1.68 level, guys, or this swing low or this swing low. Anywhere you could have easily scalped. And you can see here the market couldn't make a lower low, guys, after this kind of huge selling pressure. You can see the market couldn't break the previous low, showing some kind of support over here, or you can consider this to be a demand zones. And again the market here found some sort of demand, and you can consider the last up move before the down move, which actually broke structure towards the downside here. This is the break of structure, and you can consider this fair value gaps, the last three candles which actually broke structure towards the downside with fair value gaps over here. You can consider this zone, guys. You can see this zone over here. This is the support zone, guys. You can see the market again all the way retraced to the support zone. The fair value gap, as the last three candles which broke structure towards the downside. You can see the market took support here and rallied towards the upside, even breaking this high clearly showing a chalk formation over here. And what you can see here is that if you consider this swing over here, or if you try to plot the anchor gap levels here, you can see price taking support from this zone, and you could have entered long position here targeting this swing high also, or in case if you might have entered, you could have entered long position here keeping your stop loss just below that candle, or you could have considered this low, anything of this zone guys. And if you try to plot the fib extinction levels, the common point within this to the common point within this to the common point within this, you can see this was a 100% move. The market came all the way and exited. You could have targeted a 100% move over here, keeping your stop loss. And you can see clearly the market here showing some signs of bullishness. But here you can see of this swing structure over here. If you consider this high to this low over here, you can see the 50 levels over here where market was not able to make or close below this high, clearly showing some kind of bearishness. And even after this kind of huge bullish momentum, the market retraced and tried to break above this high, but couldn't and closed below this, clearly showing some kind of bearishness. And the market here retraced back all the way towards this kind of PD array. You can consider this to be an PD array. Or in case if you try to plot the fib levels, the common point between this to the common point between this, you can see the market here retraced all the way to 50 levels here. The golden zone ratio even broke towards the downside a little bit. But what we need to consider is this swing structure guys. If you consider this swing, the common point between this to the common point between this, you can consider this as the major support zone. This is the 50 over here, as well as the PD array. You can see the market came all the way to this 50 level as well as the PD array again, and formed a bullish engulfing pattern over here, and followed by another rejection candle over here, and price trying to break and closed. You can see a solid Manabuzu candle guys with no wicks, clearly showing signs of bullishness. So in case if you want to plot the fib extinction levels of this zone, the common point between this to the common point between this to the common point between this, you can see you could have easily targeted all the way to the 1.68 level here guys, and the 2.68 level, or you could have targeted all the way to 3.6 level. You can see here the market came all the way to 3.68 level. You could have targeted this zone. You can see guys, the market came all the way to 3.68 level, and towards the upside the market went all the way to 3.68 level, and taking long position after this kind of bullish engulfing pattern, keeping your stop loss just below that candle and targeting all the way to 3.68, or as long as the market closed below this 21 moving 9 as well as 21 moving average. You can see clearly the market rallied up, faced some sort of rejection over here, but couldn't close below this 21 moving average, again rallied up, again faced some sort of rejection over here. This is the order block level guys. This is the 1 minute order block. So you can see clearly the market came all the way to this zone, faced some sort of rejection, continued further selling, but couldn't cross this 21 moving average, and again the market pushed higher, and you could have exited somewhere in this position or after this close of this candle, and price rejecting like this, you could have exited your long position. Or if you might have plotted the 3.68 level, you could have just waited till then, and the market would have come all the way to that zone. And try to plot the fib levels here, the common point between this to the common point between that. You can see the market retraced to 0.38 level, clearly showing some sort of bullishness, and this is a 0.38 level, and even took support here and continued further towards the upside. So let's take this anchor VWAP levels out. It's very confusing guys. This is the day VWAP level, and this is the 200 moving average. You can see after this kind of huge bullish momentum, followed by another bearish candle over here, and the price couldn't cross this 200 moving average, clearly showing some kind of support over this zone. And you can see again how the market rallied towards the upside. A lot of retail traders guys who aren't experienced much, when they see some kind of huge bearish candles along the way, they try to exit their long positions expecting that the market will continue further towards the downside. But you can see even after this bearish candle, so the price was holding here, showing some sign of bullishness and clearly breaking towards the upside. And we shouldn't panic, guys, whenever you find such kind of trades. And that's why it's better to use high Kanashi candles. Once if you might have plotted the trend, you just hold on as long as you find some kind of bearish candles like on this way, or in case if the market forms a bearish candle and closes below this 21 moving average, you can see this red color line over here. All the way to here, you could have righted this trade, guys. At this position only, you could have exited your longs, and that's how you could have used your high Kanashi. This is about the another trade setup which you could have taken 3.68 level. You can see after this kind of huge bullish momentum, another bearish engulfing candle and close of that candle below this zone, clearly showing signs of bearishness. And the market even faced rejection and even closed below this low, and even below this low as well, clearly forming a chalk over here, guys. This is a clear chalk formation, and if you consider, or if you try to plot the anchor wave levels over here, the market came all the way to this zone. But what we need to see after a chalk formation is to plot the fib levels, guys. The common point between this to the common point between this. You can see the price retraced all the way to 550 levels over here. This is the 550 levels. So the market reached here, faced some sort of rejection over here. And if you try to plot the anchor wave levels, if you try to plot the fib extinction levels, the common point between this to the common point between this, you can see the market came all the way to 100% move over here. This is the 100% move where you could have targeted. Came all the way to 100% move. So after this kind of bearish candles, the bearish engulfing candle, the rejection of price, the inverted hammer, you could have kept your stop loss above that inverted hammer itself, guys, as well as the doji candle, as well as this bearish engulfing candle, and you could have targeted this swing low or the 100% move over here. This was another trade setup where you could have taken. But between this trade, what we need to see is that the market retraced again to this days, the days 200, the days VWAP level as well as the 200 moving average, and faced some sort of rejection as well as 21 moving average, and clearly the market broke structure towards the downside. This is the breakout structure, and I have explained you the three candle theory, the three candles which actually broke structure towards the downside, which I have already mentioned you, the three candles which broke structure towards the downside. And if you consider these three candles, guys, and if you try to plot the fair value gaps between these two zones, you can consider this high to all the way to this high. This is a fair value gap of this, or you can consider this as the PDRA or inverse fair value gap. It's also called as inverse fair value gap. So this is the PDRA, guys. And if you try to plot the anchor wave levels of this zone, you can see price trying to take support from these levels. And if you consider that the fib levels here, the common point between this to the common point between this, you can see this is the 550 level over here. This, you can consider this to be the 550, and this is the PDRA. This the two zones, guys. You can see the market retraced and continued further towards the downside. So after this kind of retracement, there is a high tendency that the market will continue further towards the downside. But you can see after a certain extent of move, the market took support here and continued, and this was quite unexpected, guys. You can never expect this kind of move, but you can see how the market retraced towards the upside and breaking this high as well. And again, the market came here, took support here. There was a lot of confidence for you to take long position, guys. So in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have exited all the way to 100% move. You can see here, you could have exited or tried your stop loss all the way to this zone. So this is a 100% move, guys. And the long position here, keeping your stop loss just below that PDRA and targeting all the way to this zone, or you could have targeted this swing high, guys. As you can see, you could have targeted this swing low of this move and this swing high in upward move as well. So this was about my trade analysis of both of my bank Nifty, guys. And you can see after this the market kind of moved in a haphazard manner with no clear price action towards the downside on 3.68, towards the upside 3.68%, and here the 2.38 level resistance, and here the chalk formation, the PDRA over here as well as the P50 level, the PDRA over here as well as the 50 level. The price took support and broke moved all the way to 100%. The 550 level over here, inverted hammer, the doji, bearish engulfing candle. All these three candles also showed clear signs of bearishness, and this is the candlestick psychology, which you definitely, and you can consider this also the last up move which actually broke. You can consider this zone over here. You can see here the market came all the way to that zone. There was a lot of confluence, guys, with a lot of confluence in, with not just one confluence, guys. You need to add up 3 to 4 confluences for your trade to work out. If you try to add up at least 2 and more confluences for your trades, which includes the 550 levels, the PDRAs, the order blocks value, the anchor level support, or the any moving averages support, with any of these confluences, when you add at least 2 and more for your trade, guys, you will, there is a minimum of 90 to 100% that the trade will work out in your favor, guys. The confluences should be very valid confluences. There is a very less probability if you try to add up more than 2 or 3 confluences, and if you try to use that trade, guys, there is high probability that such kind of trades will work in your favor. So I'll just tell you that with not just one confluences, guys, you don't just take your positions. So here there was one confluence like, okay, the price might have taken support over this pivot levels as well as the 200 moving average. There was 2 confluences, and you could have entered long position keeping your stop loss just below that candle. But here you can see the market clearly broke, and these 2 confluences, the day's pivot level as well as the 200 moving average, didn't really work out, because you can see when the price retraced to this level, guys, when price reaches some kind of support as well as any demand zones, you can't expect that the price will sharply come here and currently will reverse in this direction. I think that doesn't work out, guys. Whenever the price reaches some area or point of interest, there is how the price reacts is that the market might react like this, guys, and finally touches this zone, and after the price touches this zone, it shows some kind of momentum towards the upside, or there should be some kind of retracement when this price comes here, guys. You can see the huge bearish candle over here, and another candle which closed below this low also, clearly showing some sign of bearishness only. And this area or the point of confluence doesn't hold any sense, guys, because as I've told you, when the price reaches some sort of area, there should be some kind of reaction happening, or in case if you should have waited for the close of this candle above this high only, then you could have entered your long position. I think these 2 confluences doesn't hold any kind of significance, but only when you use it with common sense, guys. I think with a lot of practice only I can tell you that you can definitely trade very decently, and you could have made a very good amount of profit. You can see 1, 2, 3, 4, 5, 6, 7 beautiful trade setups which I have explained to you with a lot of confluences, guys. And now let's look into Nifty 50. And in Nifty 50, you can see that the market, this is the pivot levels over here. This is the day's pivot levels, which are in confluence with the mid of the first candle, which is almost in confluence with the 5-minute zone as well. You can see all these 3 are in clear pack, guys, clearly showing that Nifty 50, this important zone over here. And you can see here as the market kind of sort of bullish over here, but you can see this kind of momentum towards the upside, guys, as the market targeted all those sellers who might have entered here, who might have entered, sold here, here, expecting that the market might go further towards the downside, or especially those sellers, guys, who might have entered. You can see the market came all the way to this zone, or you can consider this order block level as well, or this zone over here. And when the market tried to move higher, guys, you can see clearly the market at this time frames was trading above 200 moving average, was trading above 9 as well as 21 moving average, clearly showing signs of bullishness. And you can see the market tried to move higher, but what you can see that the length of these candles, guys, when the market is trying to head higher, kept on decreasing. The first candle to second candle to the third candle to the fourth candle and to the fifth candle, the size of the candles clearly decreasing, and from here the market clearly faced some sort of rejection and clearly broke structure towards the downside here, changing the market sentiment from bullish to bearish. In case if the market sentiment would have been bullish now, guys, the market trading here showed some kind of bullishness and retraced back to this zone, or in case if the market might retrace to this 5-minute zone as well as the pivot zone over here and showed some kind of rejection and continue further buying. This is how usually the market behaves in case if the market sentiment would have been bullish. But here you can see clearly that the market here clearly broke this low, the opening price, and clearly showed some sort of bearishness. And if you try to plot the fib levels, the common point between this to the common point between this, you can see clearly here the market faced some sort of rejection over here. Or if you try to plot the high of that candle, you can see the market kind of retraced to this zone, but couldn't close above that level, guys. Or you can consider the 0.38 level over here. This was the 0.38 level. So if you try to plot the common point between this to the common point between this, you can see this is the 0.38 level that the market faced some sort of rejection. Or in case if you think that the market might have taken support from this 200 moving average here, you can see some kind of dodgy candles showing some kind of support. And if you try to plot the anchor wave up levels here, the low of this, after this huge break of this candle towards the downside, at least you could have entered short position, expecting the market to go further towards the downside. You can see here, guys, the anchor wave up level clearly broken towards the downside. The 9 as well as 20 moving average as well as 200 moving average clearly broken. 4 confluences where you had have gotten clearly showing signs of bearishness, and you could have exited your position in case if you might have thought this kind of support over here. But and if you try to plot the fib extension levels, the common point between this to the common point between this to the common point between this, you could have targeted all the way to 1.68 level. You can see how beautiful the market came all the way to 1.68 level. And after this final sell-off candle, the market continued further towards the buy side, showing some kind of support over here. This is where you could have taken, guys, a huge profit. Excuse me, guys. A huge profit, guys, you could have taken after this break of this 200 moving average towards the downside and keeping your stop loss just above that candle and targeting all the way to 1.68 level with a very small risk to reward ratio. You could have taken these positions. And look at this trade, guys. Nifty 50. Here it showed a confluence at around 942, and in Bank Nifty at around 942. You can see both Nifty 50 as well as Bank Nifty. This break of this candle towards the downside happened at 942, clearly showing both Nifty 50 as well as Bank Nifty are in confluence with each other. And you can see here, guys, the market clearly broke structure towards the upside. After this kind of huge bearish candles, a lot of sellers might have entered. And this is a final sell-off candle, guys. You can see after this candle, the market retraced and even closed above that sun. So in case if you try to plot the anchor wave up levels again, you can see the price here closed below this candle, but came all the way to this low, but closed above this anchor wave up level support. And you can see following another piercing pattern or bullish engulfing pattern over here, clearly showing some signs of bullishness. So in case if you consider the chalk over here, if you consider this breakout structure of this and consider the chalk formation, if you try to plot the common point between this to the common point between this to the common point between this, you could have targeted all the way to 100% move over here. This is where you could have targeted, or in case the 1.68 level. But here you can see after this the market clearly formed a bearish engulfing pattern and continued further towards the downside. This was one scalp where you could have taken, guys, keeping your stop loss just below that candle and targeting all the way to 100% move. And you can see some kind of support at this zone. So the market again came but couldn't cross this high, guys, and the market again continued further selling towards the downside. And you can see here the market retraced and faced rejection from this anchor wave up level and again continued further towards the downside. You can see this, the market broke this level, the 550, the breakout structure over here. What you can consider here is, here also the market clearly broke structure, guys, as in case if you see in Bank Nifty also. Here this swing structure, here broke structure, and if you try to plot the order block, you could have plotted this and continued further towards the downside. But here you can see this is the last up candle which actually broke structure. So the market retraced all the way to that zone. After this kind of huge candle also, if small dodgy candles appear, and the market clearly broke towards the downside. So in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted all the way to 1.68 level. This is the target where you could have targeted, guys. So this is the short position, keeping your stop loss just above that candle, guys. Or after this kind of bearish engulfing pattern, you could have entered and targeting all the way towards this zone. It's better to wait for one or two candles, guys, because at this momentum you can't actually expect that the rally would have started in case if the market might take support and continue further towards the downside. So exactly at these zones it's not right to take, but you can see here where the market clearly broke the 9 as well as 21 moving average towards the downside, clearly showing some sort of bearishness, and you could have entered short position here. Or if you try to plot the anchor way up levels at this high, you can see here is where the market faced some sort of rejection and broke, and keeping your stop loss just above this candle itself, you could have entered short position and targeting the 1.68%, or you could have targeted this swing low also, guys. You can see how the market came all the way to this swing low, but you can see here that after the market clearly broke this low also, you can expect some sort of demand at this zone where a lot of buyers might have buyers are entering this market. You can see after this kind of huge bearish candles over here, followed by another bullish engulfing pattern showing some sort of demand at this zone. And again, the market faced rejection from this 21 moving average and continued further towards the downside. And again, after this down also, it formed another bullish engulfing pattern over here with after this small doji candle, showing clear signs of bullishness. But here you can see clearly the market also broke structure, and you can consider this to be a chop. So if you try to plot the last down candle as the order block level over here, you can see this order block level came all the way to this zone, mitigated here, and formed another bullish engulfing pattern over here. So you can see whenever the order blocks, this is the clear 1 minute order block, guys, and you can see how beautifully the market came all the way. And after this kind of huge bullish candle over here, you could have kept your stop loss below that candle. This is a solid Marabozu candle, guys, with no wicks at all. And if you try to plot the anchor wave levels over here, you can see the market, you could have entered at this position itself after the close of this candle, and the market again retraced. You could have added onto your position where price took support from minus 21 moving average as well as the anchor wave level support over here. And this PDRA also, guys, you can see this kind of zone over here, the last down candle, this fair value gaps of this impulsive candle, the price took support over here. I think this is better confluencers, guys, for you to take long position. So keeping your stop loss just below that candle itself, you could have entered. So if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 1.68 level, the 2.68 level, or the 3.68 level, or you can see how the market came all the way to 4.26 level, guys. The market came exactly at this level and faced some sort of rejection. Till this level, you can see the price is trading above 9 as well as 21 moving average, clearly showing signs of bullishness. And this is how you could have targeted all the way to 3.26 level. And you could have just hold on to your trade as long as the price is trading above the 9 as well as the 21 moving average. And you can see how the market has behaved, guys. So in case if you try to plot the common point between this to the common point between this, in Bank Nifty, the price took support from 1.68 level, but here you can see the price didn't even retest to 1.68 level also, showing clear signs of some bullishness. But this was one beautiful trade setup, guys, where you could have taken. And you can see clearly the market broke this low towards the downside here, clearly forming a breakout structure. Or you can consider this to be a chalk. And of this fixed structure, you can consider the last up move before it broke towards the. You can consider this candle, guys, this candle over here, which showed some sort of resistance, or you can consider it as the 1 minute order block here. Or if you try to plot the anchor wave up levels over here, the last up move candle, you can see clearly the market here came all the way to the 1 minute order block. So if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, the market came all the way to 100% move. This is the 100% move. The market came all the way to that zone. And short position after this kind of rejection candles as well as the 1 minute order block zone and targeting all the way to the 200 moving average or the 1.68 level. But here you can see clearly, guys, the last up move where the market faced some sort of rejection from 20 moving average and continued further towards the downside. And clearly the market sentiment was bearish. But you can see clearly the market took support from this anchor way up level over here, this anchor way up level, or you can consider this zone as this order block level as well, guys. You can see the last down move where the price took support from this 200 moving average. And if you try to plot the order block levels, you can see this is the 1 minute order block where the price came exactly at this level over here. This is the 1 minute order block. So the price took support from this level and found a bullish engulfing and continued further towards the downside or the 100% move. The price came here, took support and formed a shock over here, guys. And if you try to plot the last three candles which actually broke structure over here, this breakout structure, the last three candles, and if you try to plot the PD array of this candle, you can consider this common point between this to the common point in this. This is the PD array, guys. And if you try to plot the anchor wave up levels over here, you can see the price here formed some sort of dodgy candle over here and formed a bullish engulfing pattern. So if you try to plot the fib extension levels, the common point in this to the common point in this to the common point in this, you could have targeted the 100% move towards the upside as well. This is the 100% move, and keeping your stop loss just below that candle and targeting all the way towards the upside, you could have exited above the swing high or as well as the 100% move. This is about my Nifty 50 trade analysis, guys. You can see this downward momentum, this upward momentum. After this kind of impulsive momentum, the price retraced, forming some sort of support over here and continuing further towards the upside. You can see how these trade setups have worked on, guys. 1, 2, 3, 4, 5, 6. 6 beautiful trade setups where you could have taken positions. And this is about my Nifty 50 as well as Bank Nifty trade analysis, guys. In case if you find my videos helpful, please like, share and comment. And if you find it really valuable, please share with your friends, guys. And keep supporting my YouTube channel. I'm making a bit of efforts to teach you guys because even a lot of knowledge which I have acquired was through YouTube. So I thought of let me share my knowledge over here. So it would be really productive for someone who is watching out there. And that's why I started this YouTube channel, guys. Please share as many friends as possible and let my YouTube community grow, guys. Thank you, guys.